Now, most people look at a chart and they try and describe what it is that they see. They have, in absence of knowing the true knowledge of what it is, people's minds concoct all kinds of ridiculous descriptors to say, all right, what the heck it is that I'm looking at. You know, all the things that he chides and makes fun of, all the rally bases and flags and pennants and wedges and everything that is forming a picture based on the absence of knowledge of what it really is. And when he explained that you can't really look at a chart, one pair in isolation, that there's much more going on, that in order to make movement in one pair, they have to work the other ones. And then when he just said it, I was like, oh, you know, I never thought about it because you can't find that, because if you look up, I guess someone from the last class tried to punch in Google fractional disparity, and I guess it comes up with some ocular garbage. Anyway, this concept is little known. It is not correlation. Let's say that from the forefront. It is different from correlation. All right, this is not correlation. This is what is truly happening to drive the movement in the pairs. And the simplest way to describe it, and bless him, he had tried and had a number of different ways to try and convey this concept. It's really just get it in your head, the concept of what's happening, and then it starts to click, and then you start to see it. And so one question to ask is it imperative that you know this to be able to trade successfully? No. Does it help? Yes. Is it the most important thing? No. But putting it in context of what Steve has been going over the whole week, it is immensely valuable. All right? And so what it really boils down to, I'll try and say this is, let's try and explain it in a way that hopefully gets across the concept. And the simplest way to understand it is understand that when people talk about dollar strength and dollar weakness, and the people are flooding into the dollars because there's risk appetite or risk aversion, that's them looking in the chart, seeing it go up and down, and coming up with a story that has nothing to do with what's actually going on. And so now when you hear these people say that kind of stuff, you can kind of chuckle to yourself, because when I explain this to you, it's just going to start clicking. All right, and it started clicking for me, and that's why I kind of ran with it. And so that's when Steve said, I guess, a little worried I was going to cut off my ear because I might have taken it too far, too in depth. But what essentially is happening every day, every pair around the world, there's the speculators and then there's the commercial interests. And so there's the volume flooding in and out of every pair all the time. And so the banks look at this and try and decide where's the volume. All right, Steve said it's all about the money. It has nothing else to do. That's all there is to it. So the guys at the bank desk can look at the pairs and they see the volume that's stacked up at different price pairs, right? At every price, there's a certain amount of volume in every pair, okay? So the euro is the most heavily traded, and the yen's the second most heavily traded. So let's say on any given day, the guy walks in and he'll look at his book, his internal book, and he'll see that, all right, there's about 20 billion committed long in euro dollar spread across, these 50 pips, right? So he's going to know that I gotta slide straight through those 50 pips to pick up all those orders, right? So he's going to start buying up euros. So euro is going to increase relative to the dollar, right? This is 101 stuff, but just bear with me. This, at the same time, he's got his other guy who's sitting right next to him, who's also looking at the yen pairs, right, to understand that the dollar yen has got, let's say, 18 billion. These are just arbitrary numbers, but these are relative volumes that you'll find in spot, right? So when that happens, at the same time, you'll see euro rising and yen rising. Now, everyone that says dollar strength and weakness, they're full of baloney, because that doesn't make sense fractionally. There's no fractional disparity, all right? So what you'll see is that in order to create movement, they'll look at the majors, right? In this case, euro dollar and dollar yen, and then they'll also look at the volume that's built up in euro yen. So let's say there's only 600 million that's spread up across euro yen. It's going to make more sense for them to hold the level. All they have to do is just soak up all the bids or hit all the asks in yen to hold the price at that level, right? So everyone that wants to get out, they can't. You see the trap move stuck, trap move stuck, trap move stuck. Price is not going to go below that level. It's not going to go below that level because there's volume that makes sense for them not to allow it to get below that level. So while that's occurring, they'll hop over to Euro Yen and start driving that pair up by soaking it all up and creating enormous spikes. So what you'll see, and so the reason they do that is because it's cost effective. This is the largest business. It's cost effective, right? If you could spend 20 billion to move a pair, or 18 billion, or 600 million, 1/20th, to get the same return, what would you do, right? This makes sense now, okay? So understand that when you see euro rising and dollar yen also rising, what's actually happening is that the cross pair is comprised of the two majors. So when you have euro plus euro minus dollar and dollar plus dollar minus yen, what's actually happening is the combination of them, understand, is that euro is rising while yen's also dropping because the dollars are canceled out, right? So you have minus dollars plus dollars. So how to understand this, if that makes sense intellectually, now that you get the concept, okay? So they'll hold one pair, okay? Use half of that pair, use all the cross pairs of that, right? So they're holding yen, they'll use all the other yens to start driving those up. That's going to create movement in the other major. Make sense? I can't tell. Where's the chat? Let me see. I'm just going to assume it all makes sense. Yep, I'm getting yeses. All right. Some yes, some no's. Makes sense to some.
Do you have more? You want to take some questions, or?
I don't have more slides. I was just going to describe in the chart how to recognize what's happening to see.
Absolutely.
Like,
yeah. Keep going. Keep going.
Yeah, it's obvious, right? It's coming into focus about what's actually happening. It's making sense. It's not making sense. It's just a concepts. Okay. Can you explain but slower? Slow down the same thing but slower. What's really happening? I'll just say it again and see if I can just simplify it in the simplest, like distill it to its bare essence. Whenever you see a pair rising nicely, let's say euro, and you look over at the cross pair and it's going back and forth, hitting, there's wicks both sides, pound yen or pound Swiss, notorious for this. Understand what's happening. Okay, just think about both halves of the whole, both halves of the pair. If you have pound and Swiss, they'll run up pound Swiss, hit those numbers. That will, kind of pull up pound a little. They'll hit Swiss down. That'll drive Swiss down a little, right? So they're whipping it back and forth, inducing volume. As soon as they have it trapped, they'll work the other pair. Okay? So when you see choppiness, it's not, oh, there's confusion or congestion or volatility or any of the other nonsense descriptors that you probably have floating in your head and will find, even on the newswires, Dow Jones, CNBC. That's not what's happening. And as soon as and when it's not the major, it's the cross. And so when it's not the cross, it's the major. It flows from one to the next. And when Steve had that chart with the grid where the euro pound laid out with the yens on one level, the Swiss is on another level, and the majors on the top level, if you arrange it like that and just watch it, and see, and just think to yourself, oh, okay, so they just hit the high in pound, and they just hit the low in euro pound. What does that mean? Right? So when euro pound is dropping, think about it, pound is rising, and euro may be holding. So look over on the euro dollar and the pound dollar and see what the case is. If it's hitting the highs as a stop hunt, okay, while you're seeing euro pound hit the lows, you know what's coming because they're trapping it in the crossbear. and it will lag from one to the next. And so if you hopped into euro, and let's say you see it just hit the M and it's gone, and you miss it, do not despair. Often you can look over at the cross pairs and see that they'll be forming up 1 or 2 bars later, because after they've worked one pair, right, all the volume is trapped on that pair. They'll slide over and work another pair, right? As soon as you got some guy stuck and you drive price down, no matter, you can just have it sit there and the guy's looking at a negative balance. And let's say you hit it to the high and pull it back, then the guy who went long is showing a negative balance. You hit the low and pull it back, the guy that went short showing a negative balance. You just hold it in the middle, right? So anytime you see chop and it's sitting in the middle, you know that there's longs that are showing open float negative and shorts that are showing open float negative, and they're both screwed. So look to the major that's causing that to occur, and you'll know which direction to take the trade. Yeah, all right, so I've just understand it in your mind about what's happening. If you look at a chart, you're going to be slightly confused because it's a deliberate obfuscation, right? It's intentionally hidden. How long have you been looking at a chart and you couldn't piece it together? It's not really there. You have to discern what's actually happening to be able to see it. And once it is, as he says, those like magic things where you develop a sense for being able to watch this and see it. All right? God, you guys are all kinds of, how do you discern? To discern it means to be able to pick out which way the pair is going to move next based on looking at the other pairs. So stop thinking about a pair in isolation and understand that it is being worked in context of the other pairs. Yes, Jerry, are you saying that if the cross pair is not moving, look to the major to get the direction, and then you can trade the cross in that direction? If you see the pound is about to rise hard, look at the pound cross pairs, and you may be good to go, because the pound will drive the cross pairs, so to speak. So, you know, if you maybe want to spread your risk, if you're a one-lot trader, put half into euro and half into euro yen, and then depending on what yen is doing, you'll get more movement or not. How do you develop the ability to discern it? I stared at the charts for way too long, but with a fresh set of eyes and new knowledge. Now knowing what we know, and so Steve gave this core information about what fractional disparity really is. Now knowing that there's a seed of truth of what's going on, I went out and actually had the luxury of speaking with some bank traders. A guy at PNB Barabas explained, you know, here's how they actually do it cost effectively. It's about the cross pairs are worked because it's cheaper, and that just makes sense. And they look at where the volume is. Then it's just they're constantly hedging at every price point, right? There's a point on every chart where it makes sense for them to drive price, because that's where they're going to walk off their money. Yeah, working the pair, right? It means running the bursts and the stop hunts, then creating the HOD, LOD. Yeah, working it is, you'll see whipsaw, back and forth, choppiness, whichever way to describe it, you know, quote volatility, erratic. It's not erratic, it's purely designed, right? It's intentionally moved exactly that way. Charts, you want charts. All right, so here's what's going on in pound today. Here's what's going on in euro. They look similar, right? This stuff need to be seen in real time to really pick it out. And setting up the grid that Steve did, that just made it like, you know, if you just look at it, you don't see why that it's set up that way. But now you add the knowledge of this, and it says, oh, okay, that makes perfect sense to set them up like that, because you set it up as a grid. Okay, I've since gotten rid of it because I got more monitors, but essentially, if you're looking at euro and you're also looking at pound, have a look at what's going on in euro pound to see if they're hitting the high or hitting the low. And in real time, you'll see, okay, all of a sudden euro pound takes off, and euro is not moving at all. Then you know that the movement's in pound.